what I see is that, like I was saying earlier on, the market has done quite very well in the last 2 years, and it is just necessary to have a correction. Now, what's going to give? Because when you look at it, the kind of movement that you've seen in some stock, the financial have not done that movement. Some people have argued that the devaluation of the exchange rate has affected it because when you convert everything back to USD, probably not even what it was USD before.
Definitely,
Yes, but what about the financials of the company as well? If you convert them to USD, are they the same thing? No, the company has not tripled. So why should the share price triple?
Was it a case of a good message to the wrong audience, or
So in my own opinion, I think that message is a message that is best said not in the public space.
He's doing to FMDQ. That's a conversation that we need to have, and then that's
another conversation.
Yeah, squeezing out brokers, making brokers look like the bad guys. Sorry.
I mean, we can have that conversation. It's not on the table.
Making brokers look like the bad guys.
I'm not talking.
You're making so much. You're seeing price recovery, you're not seeing volume recovery, right? So now you're saying, okay, 200%. Okay, should I take this 30% from them? It still doesn't make sense because you're seeing price recovery, but you're not seeing volume recovery. So people aren't back yet. So when you're now bringing the CGT, the people who were thinking of coming back definitely won't come back.
Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Ugodre, and we do this every Friday at 6 p.m. on Nairametrics YouTube channel, Nairametrics TV. So if you're just watching for the first time, new episodes drop every 6 p.m. on Fridays, and of course you can watch at your own pace. We are also now on Spotify. Yay. So for those who have been wondering and asking since when are we going to be on Spotify, we've been on Spotify for a few weeks now. So if you're jogging or you're strolling, or you don't want to like stream and watch on your phone and just put on your AirPods, you can listen to the gang and dissect the Nigerian and global economy every Friday on this channel. What a week it's been. It's been a bloodbath of a week, and for some reason, Tunji is not here for us to dissect it. He's away on business. We sent him up. He's our small brother. We just sent him to go and run some errands for us. Right. Oh, by the way, Mr. Arnold Green is back.
Welcome back.
Yes.
Welcome back, man. Are you
alive and healthy?
Alive
and kicking.
Oh, okay. I didn't say why you were out though. So
I didn't know.
Were you? Was anything wrong with you?
I was just under the weather.
Was it?
I was tired of you guys.
Was it?
Tired of you guys.
By the way,
I had a terrible flu.
Arnold broke his streak, like 1 year streak of constantly being on Drinks and Mics.
Yeah. And I was so gutted. I was very so gutted. I didn't want to post anything because I'm not there, so I'm not posting it. No, but I guess the
good to have you back, down. Man. Yeah, always. All right, great. So we have in our midst two heavyweight men. See them. These are heavyweight guys.
I'll just keep quiet today.
Oh no!
There's nothing I can say.
Don't do that.
There's nothing I can say.
Those days where I kind of suspect Arnold will just be asking a lot of questions. You know when Arnold's having heavyweights in the house, that's when he starts to ask questions, try to pick people's brain so they can figure out what to invest in and when to take positions.
Definitely.
You guys,
you're ready.
deal him when he starts. All right, so I'm just gonna let them do intro as we do, where we have heavyweight guys in the house because their CV is long. But I mean. Fola and Femi, good to have you guys in the house. Let me start to my right, Fola, just a little bit about your background to our audience. I mean, people in the market know you.
No. I'm very quiet. I'm below the radar kind of guy. So, Bade, obviously. People call me Bade. By the way,
really?
Yeah.
Oh,
funny fun fact,
nice.
we actually share birthdays. Funny enough.
Yeah.
Fun fact, for February 21st, right?
Oh, man.
Yeah.
We're drinking to that.
We're going to drink to that. Yeah. We're great guys. I kind of felt we connect.
No problem. No problem at all. So, background is securities, trading, capital markets. Largely been in the industry for about 18 years. But my focus is more around the markets, but more from a market infrastructure and structure standpoint. Yeah, okay. I love the connectivity, or maybe the disconnectivity of the markets right now, and trying to solve that. But ultimately also trying to make sure that last mile is super efficient, especially as you connect from the market core to the people that are trading, not just people like Arnold.
We're going to talk about that at some point.
Oh, awesome. I'm happy to.
We should delve into that last mile side.
Awesome.
Market disconnection and connectivity. Should be interesting. You know me, I'm a retail investor guy, so
let's bring it on. Let's bring it on. Bring it on.
But at least you're Femi now. Come on. I know it. I know it. I got this right.
I mean, I just a little guy here. So.
Please,
interesting. My birthday
please.
is February as well, but 27th. So let me wait.
Sure. Well, my son's birthday is on 4th of February, so there's let me also
So wannabe dude here. But it's okay. We'll give it to you.
Try.
He's your son. So you know, we February guys, man. We just got there's just something about us.
Nothing wrong with that. Nothing wrong with that.
I mean, I have been in the market as well. I mean, I'm a finance guy. Studied finance, both professional and academic. I have a PhD in finance.
Wow. Heavyweight.
Doctor.
And of course, I mean, some professional stuff. I mean, I was supposed to be an accountant, so I did the account, but I found out that I'm too... I'm not as patient to be an accountant. I would definitely miss the figures. I rather crunch numbers, so I moved to finance and then, did some CFA, CIS stuff and everything. And then, so I was in the banking before, commercial banking for some time. And then when I was the National Bank, I did a little bit of audit. Former OSA.
Yeah.
I mean, but we do advisory as well in audit as well. So I'm in an audit firm, but you can do a little bit of advisory as part of it. So then I moved to banking, and then I was doing credit marketing, and then I moved into investment banking after my MBA in Legal Business School. I just decided, you know what? In fact, it was the consolidation. After I spent some years in banking, and then everybody had money, and then they were just throwing money anyhow. So, I need intellectual, so let me move into where I have to use my brain. So I moved into research. So I spent 8 years doing number crunching for BGL.
The great BGL. You're back now, though.
Back. And
good to have them back.
It's funny how almost everybody that got into the market now got in around 2007, 2008. When the money was really rolling.
The money was and the market was...
So you got the dream.
Which is why Otumba is always complaining about that.
He has PTSD about now. Some of us we're so many things about now in the market before.
Everybody has PTSD.
Good to have you guys on Drinks and Mics, man. Looks like it's going to be an amazing show. Oh, by the way, Arnold, I did, anytime I go and see Trump's town, I try to get something from Trump.
Nice.
So I said I should give you this. Yeah. You want to maybe,
Not bad.
Thank you.
Yeah.
Do I show the camera what's I'll keep this one though.
Last time I read, I gave Tunji Maga hat. So that I was supposed to give Tunji Maga hat. Yeah. So this time around,
States of America.
Yeah, it's set to give.
Thank you. I appreciate it.
You're welcome.
Thank you.
You're welcome.
Thank you. But just a quick one. Femi didn't actually finish talking about your...
Oh, you want me to go?
Yeah,
everything.
Okay, then
if you don't mind.
So after spending some time to research, I moved into investment banking. And then, I did a bit in BGL. I was the MD of BGL Capital before we had the issues with the SEC. And then I moved to Cocodros, where I was able to build up the investment banking business. And I was the group executive director for 6 years. Also work with the company to expand the business from the mono business of securities trading to have many others: asset management, investment banking, trust business, insurance brokerage, and then registrar. And we did quite well. I mean, the company is soaring now.
Awesome.
Then after some time, I felt that I'm getting too old, so I need to slow down. So I joined Aiico Capital as the MD, where of course Aiico Capital was an asset management business, sizable asset because they manage the asset of the insurance company. And I felt that it's not sustainable. So what I've done now is to expand the business as well. Using Issuances business, lending business. And by next year, maybe another 2 licenses.
Oh, really?
Yeah. let me trade like him as well.
That is common. Although I'm not entirely sure if the way things go with this market, I'm not sure how that will go.
Talking about the market, we're going to start straight with the market. Because I know, I've gotten a lot of messages of people trying to tell us to what's going on in the market. So guys, it's been a whirlwind week. I think 5 trillion or so lost at some point during the week. I know by the time this is streaming, hopefully we would have recovered some of those gains. But it was a complete bloodbath from the week leading to, I think, the 7th of November. And then all the way to the middle of this week, investors sent out a loud and clear message that they don't like.
I don't like
what they are hearing. Some have said it's capital gains tax. Some have said it's Trump. You know what? You know the good thing with Trump is that Trump listens to markets, right? So I guess maybe the government has also listened to the market. So maybe let me start with you, buddy. Like, what's your view of what just happened? Why did we have to suffer?
Honestly speaking, I think it was stakeholders. In the best way to describe it in very easy terms, it was a luta continua, right? The stakeholders had. And I think it's just a lesson in stakeholders management and reform building, right? Because ultimately, what have we had several rounds of engagement with the tax authority. And it was clear, something was just clear in the markets. There was just no understanding. There was no clarity around how capital gains would be implemented. And I'm just like we were discussing before, we also didn't know, for instance, how those remittances would be done, how those deductions would be done, what infrastructure would even deliver something like that. So everybody in the market, it was on said thing. I think not on said, it was generally said in all the different WhatsApp forums. We're all just wondering, when are they going to suspend it? Because nobody really understand how it's going to be implemented. And it just started looking like every day was passing and nothing was happening. Everybody was sticking their feet in the sand. And the market just came and said, look, maybe...
One second, buddy. Let me give Femi the... Would you...
Tap the head. Just tap the head. Now, senior man.
Senior man. We respect culture.
Yeah, you have to respect it. So, I mean, the minister was at the exchange yesterday, and I think it was almost like a planned protest that the market gave the minister, and basically said, no, enough is enough. We need clarity. Because prior to now, one thing we must also acknowledge is that market was softening. It had been softening for quite a bit. We had 0.2, 0.3 losses there. Nothing massive.
That's early days of November, though, because October ended quite strong.
Things were getting. So I was even looking at it and saying, okay, not so bad. Correction may be just an adjustment of, look, we were at 50s, 51, 0.1, 0.51, 0.52. Then we just started coming down to 0.48. And this just wiped everything down. So ultimately, market also sent a resounding message to the tax authority saying, we don't understand. And one of the things market never likes is they don't like uncertainty. As long as there's uncertainty, there's no clarity. And this was just what was happening here. So in the words of looking at it very, very clearly, I think it was just time. It was just time for something to give. And this is what happened effectively.
But do you think something is given, as in, do you think this is sent?
The message. Do you think message has been sent?
Or the message has been sent? Do you think the message has been heard or received? Is that the word I'm looking for? It's like received, right?
It's been heard, maybe don't receive.
Received,
I think there's still going to be a pondering that happens, right? There's still going to be pondering in terms of whether or not it's going to.
But also knowing our policymakers, right? So this is my view, right? When I heard CGT. And I mentioned this earlier before the show. I was one of the investors or traders that I was just like, man, I know policymakers. Policymakers are stubborn, right? Yeah. And we all know policymakers are stubborn. And I knew that between now and I just assumed that my assumption still is nothing changes, right? So I assumed when I heard CGT capital gains tax, I wasn't trying to understand. Okay, obviously you try to understand when it's the implementation and everything else. But I started to get out. So from October, I started to exit what I could, especially liquid names, especially names that I knew that foreign investors, like your Zenith, your GT. The only names now that are still heavy in the book are names that I couldn't really get out of, like your MTN, your Seplat, right? So my thing is, why... That's why my protest was I protested and I was like, you know what? Nothing's going to happen, right? So... Is it that the people still in the markets, apart from the investors that are stuck, perhaps there are different kind of investors. There's a Samson investor who has who believes in Nigeria, right, but then there's a me that's like, listen, I'm here for when it's good,
play it,
right? So is it that there's a belief that there will be a change or there will be a review? Because we know
there's a belief.
We know policymakers are stubborn.
Well, I mean, I have totally different. I like the way you mentioned Samson. Now, I remember then when Samson was in UK, then working with Deutsche Bank, I guess. I was jumping after him, chasing him to come and invest in Africa. That time I was, I'm not going to come here. For some reason, something brought him home. And he saw, I mean, maybe...
And it's quite bullish.
Because he delivered. And then he came home and he's doing quite well. So what I see is that, like I was saying earlier on, the market has done quite very well in the last 2 years. And it is just necessary to have a correction. Now, what's going to give, because when you look at it, the kind of movement that you've seen in some stock, the financial have not done that movement. Some people have argued that, the devaluation of the exchange rate has affected it because when you convert everything back to USD, probably not even what it was USD before. Yes, but what about the financials of the company as well? If you convert them to USD, are they the same thing? No, the company has not tripled. So why should the share price triple? But the point about it is that, it gets to that stage that I was worried that, look, green every day, the market, consecutive for weeks and everything like that, there must be something that will give.
Yeah.
Now, what gave? Was it Trump threatening us or was it CGT? I wouldn't know for starting to, because the truth about it is that the market work on sentiment. And if you look at what happened today, the market gained about 2 point something today. I mean, kind of reversing what happened yesterday. Probably because of that small sentiment that the Minister of Finance said, we're going to look at it. That is nothing. We're going to review doesn't mean that we're not going to cancel it. It's just about maybe we're going to... In fact, he didn't even say review. He just said we are going to consult more.
Misleading.
Very political.
So now, they brought something that looked more clearer in terms of how it's going to be implemented. But it doesn't solve that problem. That question he asked, how would you implement this? They said some things. They said it's still going to be self-assessment. And then maybe at some point, they're going to introduce direct deduction from source, from stock brokers. It is complicated. It's complex. I don't think Nigeria should lose all the gains of reform the last 2 years just because the government want to take part in the, something in the market.
But I want to take you up on markets fundamentals, because whilst I hear you, I mean, the conversation also is that there's a move away from Western markets to emerging and frontier markets. And it's just the intensity of that capital flow coming to and landing in Nigeria, the Nigerian market that's driving the green. It may not necessarily mean, I understand what you're saying, it will drive valuations up with the PE catch-up. Remains to be seen. But the truth is we're also a shallow market. And what is ultimately happening now is a lot of that money needs to filter into the primary market, which is why everybody that used to go to CP markets and fixed income markets is now coming to the leverage in equities market by raising rights and public offers. So that's what's happening. And I think, can the market take it? We have to take it. I think it's the advantage that we have now. Just take what you can take. Will this drive valuations crazy? Probably, but I also think this is the time for us to now find innovative ways to be able to plug into those FPI's flows to drive the business. To drive the country.
I want us to talk about valuations at some point because one of the things that we're going to do a lot on this show is really distill equities since you guys are here. But on this CGT, I'm trying to. Are there feelers that you got from foreign investors? Because I think some people don't understand that there were foreign investors that were very shaky about all of this. I mean, I don't know. Were there feelers that you got? What were their concerns?
So the concerns were quite clear from this. How would it jump from the 10% to 30% flat? And most of them are institutional investors. So you think you're going to take 30%. It doesn't make sense. And when they're even speaking to you, the most important thing they're talking about is that retail investors may not be affected. So they're going to be the biggest guys. So,
and also don't forget there was a rights
they were worried.
issue.
So I mean, there's no that the foreign investors didn't really get it. They didn't understand what it is, and they have to flip. And it's normal, right? When you see a little bit of that uncertainty, they flip, hold their cash first, and see what happens. When you settle down, then we're going to come back if you are well. One good thing for us now is that it didn't disrupt our foreign exchange market like it used to be before. Because of that,
because of the way it's liberalized now.
So, and I think a lot of people who have kept dollars as store of value, they're pushing it up because nobody can see immediate, spike again in the Naira exchange rate. So that might have helped. Now, this reversal might cause trouble because now those guys are going to be demanding. But once somebody even told me again that in the bank is that most of the guys are not converting to USD yet. No, they kept
No.
So kept it. They're waiting.
Also, they're waiting to see what might happen.
What is going to happen?
Somebody else said that one of the challenges to one of the things that spooked the market I don't know whether you got that feeling, but I got feelers that one of the things that spooked the market was the comment around 97.3%.
Yes, that what I just said now about the fact that the retail guys are not going to pay. Only 3% are going to pay the tax.
So was it a case of a good message to the wrong audience, or like?
Okay, so in my own opinion, I think that message is a message that is best said not in a public space, right? Even if that's the intention, right? Because even without necessarily receiving that message, by the time you review the policy, you already know who it's meant for. It feels very clear. It feels very clear. But you now coming to say it also then delivers a certain thing. So one needs to understand, again, I think the problem with this issue was, again, stakeholder messaging, stakeholder engagement, even though Mr. Oyedele had several sessions, but I think it just did not land. And I don't think it connected. I think it's going to have to seriously connect. And I think my own advice would be, just hold off on this December implementation date. Maybe even just move it for another 6 months.
I thought it's January implementation.
She said January, December. That's what I meant. So by just move it, even give yourself 6 months.
Man, I think it's suspend it for a few years. No, suspend it for a few years because the markets. Because the markets are just coming out of the economy is just coming out of. The equity market is a forward looking. Is forward looking on. So today's equity market is based on where the market sees the economy tomorrow. So the market was seeing an improvement in macro signing of everything from bank stocks rallying to consumer stocks rallying. And that's why we saw this huge push, right? So the market liked the policies, the reforms that were set in place. Volumes aren't crazy like they were in 2007 or 2012 or 2013 or 2014, right? But you're seeing that, okay, hold on a minute, this market is looking good. On the equity, but if you then look at the local equity holders, if you look at the asset management industry, equity holders in AUM is what, less than 1%?
Oh, yeah.
Right? So the market isn't really fully back. People are still not fully back. And I'm not even talking about FPI. FPI is another conversation. Local investors are not fully back in the equity markets. Yeah, you're getting the 200% or 300%. People are not fully back, right? And then on the FPI side, we're still not in the MSCI. We're still not in the
So your point is that we really haven't recovered a lot of things that we lost.
You're seeing price recovery. You're not seeing volume recovery, right? So now you're saying, okay, 200%, okay, should I take this 30% from them? It still doesn't make sense because you're seeing price recovery, but you're not seeing volume recovery. So people aren't back yet. So when you're now bringing the CGT, the people who were thinking of coming back definitely won't come back.
So on the sidelines.
I totally agree with you that, I mean, that's the kind of interview that I granted to the Nation yesterday when I told them, look, if you look at other countries, right, even the West, they're trying to do policy that are protectionist and try to attract investors
back into their own countries.
A lot of them are lowered interest rates so that people can get money. It benefits us because there's tendency that there's carry trade to come into the emerging market. But you don't now roil that by throwing this kind of panel trade. Now, the ideology is very simple. Progressive and leftist. So when they call him socialist, you should accept it. Because the way he was communicating.
Communicating in some kind of socialist way.
Socialists are pro people and against the market. The market will never like it. So even if you are doing it codedly, they are watching. You're not saying to them, I don't give a hoot about it. So that what happened. You don't need to tell them that 33% will pay.
Interesting point there. And there was some data that the Drinks and Mike research team, by the way, we've got a Drinks and Mike research team now. Nairametrics and Arnold here. So great team, put together some data. And so just to give you guys some insight. So in the US, maximum CGT is 20%. Equity risk premium is 4.3%. Country risk premium is 0. CPI is 3%. Now you come to United Kingdom, maximum CGT is 24%, which these are countries that they try to compare us with. Equity risk premium is 5.13%. Country risk is 0.8%, and then CPI 3.8%. Now, let's come to South Africa. So South Africa, maximum CGT is 18%, country equity risk premium 8.3%, and then country risk 4%, and then inflation 3.8%. Now you come to our dear Nigeria, where we're proposing, we're actually using 25% because we hear it will come down. We had to be 25% at some point.
Right?
Yeah,
At some point,
we had there will be a gazette that will go out and reduce from 30 to 25%. So let's say we use 25%. But guess what? Equity risk premium is 14%, and I think that's even conservative. And then country risk premium 10%, and then CPI at 18%. So you see that as much as we have the highest bracket for
gains,
for capital gains, on a risk level, we're pretty high.
Of
So it appears that the tax should probably be
lower,
be much lower, isn't it?
Should be. I mean,
that,
there's no doubt about it. We don't even need all this tax at this moment. If anything, I mean, I agree with him. Suspend this for some time. Maybe because the government has taken some money from the banks, from the exchange rate gains, and they got away with it because nobody
for tax and all that stuff.
They felt that I must take some gain from this market
from the
as well.
market. I mean,
that's what I'm saying.
No participants.
I will focus. I will wager that best thing for you guys to do is focus on that 10% CGT coming first. Let's put that thing in place and everybody sees it and then we can grow with it.
But the funny thing, Femi and Adeyemi and Arnold, because when you hear, market participants like you guys, even me as well, say, look, we don't need this tax now. People would think maybe there is no tax. There's actually tax.
There's plenty of tax.
There's VAT. There's tax that's paid on every transaction.
Stamp duty. There's everything.
I'm saying leave this CGT at 10%. Let's be sure that people are paying it first. Put platform in place that make it transparent and everybody sees it. The way you increase it at that time,
for me, it's easier. Let's be sure that people are participating in the markets first.
I align with you on that because to be honest, if you look at that research and you do look at the size and capitalization of the markets, we're not even close.
No,
exactly.
$100 billion.
And the pension funds aren't paying this. No, it's just asset management.
It's clear who they're targeting.
That is less than 1% of asset classes.
So the philosophy should really be, if
President Trump will only be saying, check the market. Even here, we always say that the strength of the economy, the barometer of it is your stock exchange. Once your capital market is doing okay, everybody will believe. Let
me even play devil's advocate real quick in terms of this whole collection, because something just came to mind. In my mind, I was like, okay, tax guys are going to even make the money. But then again, you also think about how many tax accountants, or how many accountants do you even have within the country that are still within the country as it is?
We are plenty.
So many. How many tax?
No, maybe you are looking at the tax accountants in Nigeria. They are not the sophisticated ones. Forget sophistication. They just have the tax sheets and they know how to crunch the numbers and then how to deal with tax guys to sort things out.
Sorry,
there are a lot of
tax
people
accountants. Association of tax accountants.
For me, the trade is get out this year and then come back on the 1st of January where you know that the 30%, the 25% CGT has been priced in. It just makes it easier and makes it cleaner.
I mean, so for people like me that are having prop portfolios, it's just a disaster. It's just a disaster because I already have my target set for the year. Quite all right. I met my targets earlier this year, but the truth is, small bro. That's why you're getting taxed. I apologize. I take it back. But the problem is, it's now, and the thing with securities trading is, you're up one day, you're down the next, and this is not even the time when you want to be making error trades where you now start making corrections for. So this bracket, this whole us being in that layer, institutional investors, it's the problem. It's a real problem because I can't, as a business owner or as someone who's driving that business, start looking at how I'm going to be able to grow my business in 2026. I have to start permutating or combinating for 2026 now because all my strategy now is now because ideally what I should be doing now, what I should be doing now is creating a pipeline for 2026 performance and getting into those positions. But now, how am I going to? I don't understand.
Typically the best try to do is wait. You start taking position for next year in December.
Exactly, and that's what should be happening now.
You close 15 and just wait.
Are we saying now that?
That may not be happening.
That won't happen anymore.
I'm not saying that we want to wait to January 1 before it does that.
That's what we're saying.
While we're dilly-dallying on that, let's just segue into, I said this was going to be mostly equities we're going to be talking about today. I want us to also talk about, offers. There's been a lot of capital raised this year. I think it's one of the successes of this year that is really not that much talked about. Right, we've seen. I think we've talked about commercial papers a few times on the show. We've seen massive commercial paper raises, but in the capital market, as much as we haven't seen IPOs in years, even, but we've seen a lot of public offers. We've seen right issues. I think by our estimates, almost 4 trillion has been raised between last year and this year. Various ones. There's Access, of course. Nigerian breweries raised 500 billion or thereabout. Zenith raised 350 billion. GT 360. These are humongous numbers. Yeah. Even DFD is raising 50 billion. Presco wants to raise 237 billion. Lakes wants to raise 235 billion.
The legend.
Legend wants to raise
right. Honestly, it'll be interesting to see what happens.
Where's Nairametrics? Where's the Nairametrics? So that's what makes. Sorry, that's what makes. I just want to go back a little bit. That's what makes the CGT thing very sad for me because you're having.
But I excluded this, by the way, raise capital raise and all that.
But I'm just talking about this new equity in the markets. Just in that sense, there's new equity in the markets. Right, these guys are doing rights issue, whether it's a split, whatever it is, new equity in the market. So are you going to tell me now this new equity or any new equity participants that have come into the markets, they will get penalized by the CGT next year? So the whole thing still makes. I just want to going back.
You just don't want to pay tax, Arnold. You just don't want to pay tax.
It's not good. I would say this. If you look at what's happened in the market, you mentioned commercial paper, and I'm very happy about that. Even treasury bills, even bond issuance, auctions.
Always oversubscribed.
See what happened?
Yeah.
When this
so where's all this money coming from? I thought we said we're
now. I don't know if I should say this, but the fact is that you remember that there was some trillions of naira that we have to do bond for to pay back on that ways and means
and all that. So that money is awash everywhere.
That money, the money went somewhere, and we can't see that money, right? So that's why we have to create debt to be paying back to CBN. So that money is somewhere. Every offer have been oversubscribed.
Yeah.
Right. Now, even apart from that, a lot of us individuals too, we kept USD as store of value.
Straight.
When everybody was confused and we don't know what's happening, in the last dispensation. So bringing it back now, even it was your 10 grand that you bought at 40K, 4 million or whatever that time.
It needs to land somewhere.
That's some 50 million naira for you.
It needs to land somewhere.
So it's already turned some cash into you. So that position make me believe that it is easy for you guys to raise money, even equity, right? However, it's not just anybody that just raise equity, right? The banks, it's clear now. You can check what they are doing. Strong balance sheet, strong volume that they have, strong revenue and all sorts. It's easier. Presco want to do 237 billion. Already they have 200 billion in equity. Already.
I remember they did that debt in February. They did 150, 80 billion. So
but that's debt, not even equity. I'm saying that already they have equity of 200 billion.
Okay,
The revenue is about 274 billion for third quarter 2023. So there's something that's good for it. So an equity. And I think return on equity for September was about 50%. So strong now. So when you see PE venture capital want to, I have some friends in that area, and when they say the first thing they look is at is what's also balance sheet size. Your balance sheet should be sensible enough to take the money you want to bring. So when you now have companies with 3 billion total asset, say they want to raise 150 billion, or 235 billion. You worry that is it what?
I see Alex has like
right. I actually did right issue for them in 2020.
So why are they raising that much money? Like that is like expansion, almost 50 times their balance sheet.
So exactly that is the worry for me. But the fact to me that money is to buy the company they want to buy. About 200 billion will go into that to buy their palm oil business and their cassava processing business, and then the other one to do top. Is worrisome, right? Because the company has not made revenue for the past 5 years. They just made 7 million just this year. When we did the first issuance we did for them, then it was more of clearing some debt, right, to make the balance sheet look good. But I want to play devil advocate, or let me just say I want to use analogy to say, when you are planting in bamboo, they claim that it takes a lot of time before you even see the stuff coming out.
7 years,
because it has to bring you, because it has to be tall. I want to believe that is what you guys are trying to do. Because the company, many companies on the stock market that you think that they are doing not too good. If I go in, I might turn things around for good. So that's probably what you wanted to do. One, to expand what the company is doing. Over the years, what he has done is to increase their land banks. Taking land in Enugu, in Ondo. They were just in Edo before, small portion, but he has tried to Even what is buying from ARP is mostly land bank.
Yeah.
Because they have sizable uncultivated area, more than even the cultivated area. So that is what he's doing. Whether this will pan out or not, it's a different problem, right? But that's what I see that he's doing. But regardless of what it is, that 35 billion is too much.
But the question
the
really is,
asset that he's buying is 200. That's the thing, right?
But
so sorry.
No, go ahead.
Sorry, I'm just saying that the asset that he's buying, Agro Allied, I can't remember what it's called now.
Yeah.
ARP is about 200. And so why do you think it is a possibility that it won't work? Is it that you think it's too big for him to manage, or it's bigger than him? Or?
It's about raising the money, because you want to raise the entire money from public offering.
Yeah.
It's not that the money is there, you buy. It's even better to, in a way, you can go borrow the money, buy it, and deleverage by going to equity market to buy. By that time, it's already sitting on your balance sheet.
Yeah.
But right now, you are going to the market, and it's public offering. I don't know. It's possible. You expect that they will have done a lot of
You'd have done your research before they put out in the
but
market.
I'm just putting the cap of a venture capitalist to look at it. You have 31 billion.
But
also
venture capitalists
think
will invest in this anyways.
I know.
So two things on my mind. One is, again, speaking to him, I think there's a wind in the sails of agro-allied and industrials that he's trying to catch effectively. And I think that's really what probably is going to be driving the sentiment around him raising that amount of money. But another thing that just came to mind was the offers that the offers that you're talking about. And the truth is, there are some that said that they are on that list and some that are actually being quietly done. Because even in the securities market space right now, even though we're at the bottom of the barrel in terms of the size of whatever we need to raise, everybody's raising capital. Everybody needs to raise capital against next year. Even pension, the asset management, everybody's trying to shore up their balance sheets.
Regulatory, not market induced.
So the truth also is, I think there's a conversation around, the truth is there's a lot of data a lot of people are using to drive their business now. I think there's a deleveraging conversation that's effectively happening.
Yeah.
Because they're using the FPI influence, the market drive, the market intensity to just use that to leverage their balance sheet. And so that bottom line is getting better.
Yeah,
which is
that's what the likes of Presco is doing.
So
That's what Presco is doing.
maybe that's brilliant for Presco.
Yeah.
Again, I said it, you already have 200 billion as equity.
Yeah.
You're already doing 50% return on equity.
And they need to release the financing cost, the interest cost needs to reduce it as well. So
there's also a thing about growing a business in multiples. You don't just go from this to this. You have to scale your business with.
So is that what you're saying against LLX?
That's my concern, and I think because it's not an easy thing just having all that money drop in your laps. Because you think about what happened with commercial banks in 2004, 2005. Exactly. There's a governance learning that you have to go through in terms of scaling your balance sheet, and all those things have to be in place. Because if not, what will happen is you just end up squandering that capital.
The good thing with this one is that you're already buying an asset.
Yeah, that's why I'm comfortable. That's a good thing.
Nobody knows how well that asset is.
Exactly. That's what I'm saying. The company is a private company. Nobody knows anything about them. The only thing you know is that they're doing cassava, they are no palm oil. That's all. Now, how good they are, where the balance. He didn't even mention how much it is. If not that we saw it in the prospectus to say, okay, I want to do 45 and 155 for the asset. And that's why you know that 200 billion is what they're likely going to pay for that. And then the remaining will be for, working capital.
To be honest, guys, I'm for recapitalization of companies because I think with this sort of value destruction that we had because of exchange rate over the last 2 years, it only just makes sense that you have companies that at least pound for pound are back to the level they were 2 or 3 years ago, dollarized. Right. And I guess that's why you're also seeing, because a lot of them actually had to take on debt. They're deleveraging. And don't you guys think that this sort of capital raise that we're seeing, it's important to drive the next thing that we need now, which is economic growth, because you're seeing inflation trend downwards, you're seeing exchange rate stabilize. So that economic growth that we're seeing, is this not going to maybe...
Yeah, 100%, because this is the basis on which that 1 trillion naira economy, which is what everybody talks about all the time nowadays, is going to happen. Because you can't, again, to that FX issue, which you just mentioned earlier, can't happen again and you are not braced for it. And that working capital basis is what you need. So even I bring it home to my own type of business, right? And which is securities trading. We all know the market is likely going to grow, right? As the way I position myself as a business in this market is that, look, I've looked at probably the top 10, top 20 guys. And the people that are the top 10 are the ones that are really feeding. People like Arnold are really feeding, right? Yeah. So don't joke with
doesn't want tax.
That's the reason. So honestly, I have to grow organically, right? I can't. There's the whole commission thing, which comes to the last mile conversation I was telling you about. It's going to go quiet at some point in time. There's a compression on brokerage commissions.
Okay.
You understand why?
That's another conversation.
It's another conversation.
That is another conversation.
I
The brokers.
I have to be able to feed myself organically.
Zero though.
People don't want someone to feed.
Nobody bothered about. I mean, do you think what we look at where we are there is brokerage commission?
It's not. So you have to grow that business organically. So it's only by growing your balance sheet that all these things will happen.
A lot of those guys at top 10 get what they feed. The brokerage.
But you know, I like brokers though. So I'm on the broker side. Honestly, I like brokers. I think brokers are important in the markets. I think they create liquidity. They create the markets. Right. On the fixed income side, what CBN is doing to FMDQ. That's a conversation that we need to have. And then that's another conversation. Squeezing up brokers, making brokers look like the bad guys. Sorry?
I mean, we can have that conversation. It's not on the table.
Making brokers look like the bad guys.
I'm not talking.
You're making too much. You're making too much money. So I'm going to cut you off. That's a conversation that needs to be had. Maybe it's not for today, but you know, I like brokers. I even think to a degree. I mean, I'm happy paying brokers. I'm more than happy paying brokers because I know what they do for me. I know that if
brokerage fee should be zero though.
I'm happy to pay brokers. I like to pay research. I like to pay brokers. I'm a seller. I need a buyer.
Does research for you now.
No.
You always tell me all those ChatGPT. I don't tell you. Guess what? I just did ChatGPT and it told me buy this, don't buy that.
You know,
but I'm more serious now.
But I like brokers. I like research. I think I'm happy to pay broker fees, whatever it is, because you know brokers create the markets. If I'm a buyer, I don't know where the sellers are. I'm a seller. I don't know where the buyers are. All I have to do is call one guy, and he goes and finds it for me. He deserves to be paid for that. But that's another conversation.
It is. I mean,
I'm very interested in that conversation.
He's a broker, so he's very happy about it. I get that. You know, the truth about it is that things are changing, and you know we start imbibing what the West is doing as well. In fact, some of those guys they rather pay for research than for the brokerage. So that's why you see that the brokerage company they now put together.
So let's even look at this whole value chain now of capital raise. So we're seeing over 4 trillion being raised. I mean, I think our last calculation was closer to 4.2, 4.3 trillion or so being raised, and almost 5 trillion will be raised by 2026. Of course, on the back of bank recapitalization and all of that. So there's an entire value chain to capital raise, right? So there's the companies that want to raise, there's the brokerage in the middle. Now, on the other side, you've said, all that money that was, you know, ways and means and co that was pushed and, you know,
it might be
last years and all. I know. Speculating, But let's now on a capital formation basis, right? Who typically would be on that other side, right? Because even if this money is from ways and means, it will go through some kind of vehicle, isn't it? So who are the guys on this side? Is it the private equity guys that we're seeing? Is it HNIs? Is it pension funds? Who are the guys? I mean, you guys are the ones on dealing with this. Who are the guys on that side?
From what I'm seeing,
heard that politicians, senators too, are also buying.
That's what is happening now.
I will neither confirm nor deny what you have just said. But the truth is, that HNI space is what I see it driving a lot of acquisitions from where I stand. Depending on what kind of company you're looking at, though. I really do wish that the PFAs take stronger positions. In all these things, because I think
PFAs are not doing enough.
I don't think they're doing enough. If I'm being honest, not in equity. It's more of FI. It's more of FI debt instruments that they're really, really strong on, and I think that's one of the things that
people. Oh God!
No, but that's really where it is. So I see HNI is really driving that space, and I'm not entirely sure. My concern also is that even with looking at the market spectrum, your up and coming retail market, it's also kind of not focused on the equities market right now. It's not as much.
Yeah.
It's not really much. So you're looking at people that are looking at crypto. You're looking at all sorts of alternative assets. But equity is something that they've stayed away from. So my concern also now is 5-10 years down the line, who's going to be buying equities?
I mean, they're going to come back.
Equity comes back.
No, but who else? Again? So he said HNIs. Who else on the other side, from your own point of view?
Equities?
On the
equity side. Like, who are the guys behind all this public offers and all that?
I mean,
so you have asset managers, right? Asset managers.
Asset managers pull money for people now.
Yeah, so your retail investors, HNIs.
But when they pull money, they buy into their own fund as well. They buy into their position as well. They, props and everything.
Yeah,
so we have financial institutions too. A lot of those things. PFAs too, right? They do buy. It's just that we say it's not stock significant compared to what they do in the fixed income.
Insurance companies as well.
Insurance.
No.
Equities.
Nah.
They don't touch, right?
There's no love for
They're
equities.
afraid. They're afraid.
Because they need their cash.
The premium.
They need their cash.
So
if
we say PFA is reduced, insurance companies out of the way, and then so we're not left with just asset because it can't be private equity. Private equity guys.
What I'm seeing from my side
so
is
who
asset
are the guys?
managers.
And we don't have
what I'm seeing
really
from asset managers. And what you're seeing now is because you're seeing rates are collapsing in terms of treasury bill rates. Bond yields are also collapsing as well to a degree. CPs are not as hectic as they were, right?
Because
equity gives you.
You don't have bond as alternative because rates. What has driven a lot of people to the CP market
was rates. Yeah. So the last high CP you got was John Vent at 25%, and that was end of October.
Yes,
everyone else now just
cut it. That did about 26.
Cut their rates down.
Oh, really? Yeah.
I missed that about the rating. So if your rate is strong,
that's another matter. Yeah.
So everyone else just started to issue at 18-19%, right? So
maybe not yet.
The only thing
maybe more like 2022.
Equity is the only thing that gives you that CP kind of return, right? So you're probably going to see that CP investor base move to it. They will move. There'll be the LLX buyers because they see a 30%, at least 30-40% 1 year, right? Equities. There'll be the Presco issue guys. Because I see a 30-40% despite CGT in 1 year. So this is me from how I'm seeing it. I'm rolling
I think
from
Badi
CP
was
to
right
equity.
about the fact that majority of the guys that buy into equity, they are the HNIs. And once the HNIs, HNIs include even the existing,
really have money.
Some of these are the existing bank owners too.
So
because your placement is, even if you place with anyone, you're not getting 1 year 25%. So equity is the only thing.
I'll tell you something. There's also something I've seen, which is that the number of asset managers I've seen has started growing significantly. Compared to what it was before.
Yeah, you're right.
And they're not necessarily
one different hearts in the last 3 years, 4 years.
And they're not necessarily the ones that are collecting money from clients. They will raise their own money and deploy. So they don't want to stress out retail. They don't want to, just focus on their thing and just run it. So I've seen those type of outfits really come up nowadays. And I think those ones are also going to be the ones that will drive a lot of activity.
All right, guys, let's now move into something else that I've always... I'm so excited today because I love when I have markets people on Drinks and Mics. Every day we have you guys on, so I would milk it today. So we haven't seen IPOs in years, Femi. I remember the days of BGL and co, man. Those good old days. Do you see an IPO market in the horizon?
I don't like to be using those kind of
because I don't like all this listing by whatever.
But it makes sense, and I'll explain why. So the IPO thing, right? Even the NGX is pushing themselves to try to do that. Femi is on that. Jude, all of them trying to get IPO back. But what has happened is that the markets since 2007, the markets have not recovered. Because there are a lot of
trauma.
Almost 20 years, bro. The problem about it is that, you see, a lot of people even raise money, and the money didn't enter the company.
That's what's up now.
Some of the IPOs, they come there, they do offer for sale, rather than offer for subscription, rather that is the share that's pocketing the money and disrupting that. So a lot of things. So what people now want to look, and again, when you're doing the IPO, we are limited into the amount of information that you give to us.
Yeah.
You are not yet being regulated, right? You are just come for the first time. Probably the best thing you've done is you have turned to PFC. Register with, and then you come to the market to IPO. So we are not scrutinized enough.
Then.
Yes. I'm talking about now.
But now, isn't it better?
So I'm saying that then we have not synchronized. So people come, but people are buying because of the way they see the market jumping. And then remember too, it's because of the reform. We just came back from 1999, democracy, things are happening, civilian.
A lot of money coming in.
It was low
the good time.
Now,
good time.
when that happened, people went away.
Yeah.
I'll give you one example. The most successful IPO we've had after that crash then was Seplat.
And
Seplat raised only less than 20% in Nigeria. Most of the money was in
outside.
The PFAs, I remember chasing those PFA before one person that wrote one nonsense research report.
I remember.
Just killed it.
That research report,
Killed everything. All of them.
I think about 500 plus or so back then.
It just busted. So now
it's like 5K.
Other one, I remember doing IPO for Sako in 2018.
Sako, yeah.
It was a struggle.
It was a very rose.
It was a struggle. How much did you want to raise? Less than 2 billion naira. We couldn't do it. Nobody wanted to buy.
Wow.
And that one is even with the BP that we have to go to all local government. We have to distribute from to all local government. We work with Fativa and controls there.
I remember.
It was a struggle, right? To get people to buy it because now the other one that is successful was MTN.
Yeah.
That one
Was it
MTN was strange one.
It was already in the market though.
Let me explain now. Let me explain.
We have to do it in the house.
This was MTN. You remember very well. That same time MTN was doing it. Hetel did too.
Yeah.
Yes.
And they did straight IPO.
Yeah.
Check the success of the two of them. What happened? Hetel struggled.
Yeah.
In fact, Bati, Hetel in India had to put the money for Hetel Africa. MTN was oversubscribed. In fact, I bought some stock. I'll go to Chapo here. I'm saying it was oversubscribed. Why? Because they listed first by introduction.
Yes.
They decided submitting their document. People saw it, say, they have this cash.
Yeah.
They start seeing the revenue, 1 trillion. Then
Everybody
people
wanted
bought.
MTN. Yeah.
By that time, they've seen them. They know what it is. They've done investor presentation. They are regulated. They are disclosing their report. It was easier for people. So transparency has already been built into it.
Yeah.
Successful. Bati was just coming from private company. You think within that 28 days of offer, I will be able to finish everything I review and decide? Sorry, I'm not ready. And that's what happened.
But MTN, remember it was a link note before.
Yes.
You qualified investors.
Yes.
Only qualified
So, apart from the link note, they listed by introduction. And they waited about a year
before they actually opened up properly.
So they were already giving you quarterly
So
report.
are you not saying that rather than
that's
IPOs, gotta listen? This listen by introduction.
You're not getting list by introduction is totally different thing. You are listening by introduction not to raise capital. You're just listing.
That's what I'm saying. So should that be actually the route?
Visibility.
Is that the route we should be
It's
doing?
not bad.
Maybe.
See, at the end of the
But
day,
it's a lot slower though. It takes about a year.
It doesn't. It's your decision. See, I want to wait for 1 year because I want people to see
But
me and
listen
know
by
what it
introduction
is.
doesn't create float now. This doesn't. Like
So you are not getting it.
It's just
Listen
to
by
come out.
introduction.
It's just to come out.
I see
I
the
will advise
strategy.
my client. I did the same thing with Mikio. I told Mikio, list by introduction first. See them,
Makes
they
sense.
listed at 299, but they are 20 something naira now.
Yeah.
Now, if they go to the market, why is market pricing them that way? If they had gone to the market for IPO that day, they would have sold at 299, but they would have been scratching their head now. Now, if they go to the market and do 20 naira, was better for them than the money go. Now, the idea then, if I do that time, people say, those Indians, no way, I'm not buying. Because it's not enough time for them. When we did the first ball, it was a struggle. We went around to all the PFAs. All. Wale, all of them, it was Sigma that they are doing all the things again. They didn't buy still. You struggle.
Yeah.
So don't do. But then later on, when we started doing CP, we got the money, we finished the cancer center, the cancer treatment center in Oshodi. I had to record, shoot them and everything. They say, oh, really? So you people did it.
I don't think good business.
Exactly. But right now, they are oversubscribed.
Yeah.
You know, the funny thing is that people don't know Mikio as a pharmaceutical manufacturing company. They only know the diagnosis center.
Exactly.
Center,
It's just incredible.
yeah.
Even we at Nairametrics, we had to actually go there. Exactly. Yeah, we went there. We saw. We're like, what?
Which speaks to something, because the other side of this IPO conversation is it's just more expensive. It's really so much more expensive because you have to do a whole lot of marketing, you have to do a whole lot of engagement, stakeholder meet here and there, compared to something like just like you mentioned. Because if you're coming for the first time, nobody knows you, nobody knows what you do. Even if you struggle, you will still not place well enough. Yeah. So you will spend that money. So to that point, I fully 100% agree with you.
Mikio is going to come for IPO. I can assure you that. They're going to come.
After
Listen, my introduction does not stop IPO.
It doesn't stop IPO.
Oh.
It's just
that
introduction.
I want to be listed. In fact, Mikio's listing was a condition by the PFA then to say, you want to do big treat for us. You collect money and disappear.
Man,
Go
big
and
tree was
this.
a-
You see that?
all the Stroma is coming back.
You see the view.
Go down, don't go there.
This
There are
Stroma is a
many.
lot.
There are so many of them. That's why people are afraid. Starcom collected money. Remember Starcom? See, another one.
No, that Stockholm was. Oh my
You
god!
see? So
They didn't let us sleep up because people were all. Back then, I still remember it was so much vibes. So much vibes.
Documents. That's
But
what
I
they
think
used to
Richard
sell
was the
everything.
worst.
Ay,
He was. I mean,
It was bad.
he was the worst.
Because then
Deal
people were
ever.
not even checking. It was
Yeah,
not for sale.
it's an IPO. You
It was
just
not
get
for
it.
sale.
Yeah.
So yeah, I mean, it was a lot of FOMO back then. So
Exactly.
things
So
are
that's it.
things are a lot different
Yeah.
from what you guys are saying now, and so kind of looks like list by introduction. But let's even look at some of the deals that I've seen. In the last few days, I think I've seen VFD 50.7. What do you guys think?
Right issue. I mean, it's,
Can you speak on it?
give us inside information.
Chinese walls. Then of course,
VFD has turned itself to an investment company.
Yeah,
That's what I'm saying.
that's-
So-
that's-
And that's only becoming a bank.
Isn't
That's
that
only
what
becoming a
we've
commercial
always wanted
bank
to be, though?
Well, VFD started as a small lending business.
Yes,
Because,
yeah.
most of them were BJ with Noso and all of us and stuff. So, I mean, we worked together on so many things. There was time they wanted to do an AMTO, they wanted to do bank and everything before they went to Abe. So, I mean, it's an investment. So, when they raise those money, they try to, buy into some existing business, probably flip them when they have the opportunity.
Yeah, that's the model. That's the model.
So, I mean, it would be brilliant. I mean, depending on the kind of return they are giving to their shareholders. And I think that for them to be bold enough to go back again and again, because this is probably the second time
they're going back.
done it in
And,
2000.
I mean,
so,
what about just for clarity? I mean, it's very clear, and I've said something several times about this segment. The CP market was very vibrant, and anybody tapped into it. So debt was an easy way to raise capital, and for someone like VFD, that's ultimately the strategy: raise your capital, run your business, but debt can only take you so far. And ultimately, they're looking to scale, and I think it's Pan-African operations. That's the view, as well as leveraging the balance sheet, so that again, bottom line looks a whole lot better.
we're always going to the market. Right? We're going to probably go to the market next week again to raise commercial revenue.
So it's normal. So I think it makes sense. I mean, for me, that's the whole basis
What
of
about
the issue.
ING? I mean, leading-on company, industrial
How much are they trying to raise?
gas, 6 point. Something a lot, $7 billion. I mean, imagine us saying 7 billion naira. $7 billion naira.
It's not much.
It's not much.
This line,
Legend internet to 150 is too small.
But guys,
you told me about
do
it,
you
and I was
see?
like,
Do you guys see a 1 trillion naira raise?
Trillion.
Public offer anytime soon? Like in the next.
I think it's doable.
I've been doing close to 500 billion. now with the bank.
I think it's
billion is not 1
doable.
trillion.
It's not 1 trillion, but I think the banks would do it, right?
We're
This
gonna
big
get
guys.
there.
Because
These big
nobody has
guys,
raised a
it's-
trillion.
To be
yet.
syndicated.
Not
Yeah.
yet. I mean, but
So are we saying, should we recapitalize bank more? Do we need more? Like,
No, I mean, leave
bank-
banks alone. Now we've had enough. They've had enough. Everyone's had enough.
I wouldn't say. I mean, the point about it is that the question I'll ask is that what
For what?
purpose?
Yeah, for what?
Exactly.
Because I don't see where I'm plugging it
for
in.
what?
If their numbers,
For what?
they are critical
Yeah,
decrease,
for
because
what?
a lot of time we destroy those capital
Yeah.
and just giving it to somebody that doesn't
Yeah,
need it.
yeah.
And
And that's
say,
what
I hunted the document that I said getting bank to lend again. And I put it down there straight to say, look, I'm not happy with CBN for punishing the banks without punishing themselves. You created the problem. You asked people that are using 2 billion to raise capital to 25 billion. I was National Bank. We struggled to get to 2 billion, only for you guys to say we should go and do 25 billion. Now we wanted to do some merger, but because we are part of Odua, we had to merge with Roma Bank, right? We raised 25 billion and work there. But what we find out with those one of those guys is that they don't need the 25 billion.
Because
doesn't
it
have
was,
anything to do
was
with it
really, I mean, these are the things that they teach you in
but
an
they start
accounting, really. Like
speculating.
when you have more than what you need.
Overcapitalization.
You're
Also
going
the
too fast.
marginal
That's what I think.
utilities or-
That
yeah.
over trading,
It was-
people start speculating.
Good time. It was a good time.
But don't we need so don't we need businesses that really have skill? Like you're seeing a lot of all these startups today. Like, I mean, I don't even want to call them startups anymore. All these mostly mega fintechs. That's what I call them.
Startups.
I like calling them mega fintechs. That's what I want to use. The startup just sort of waters down the thing. Mega fintechs. You're seeing like Opay, you're seeing Folagbade, you're seeing MoneyPoint, you're seeing into Switch. These guys, people would tell you that they're worth billions of dollars.
Yes, they don't need you. They don't need the Nigerian
so
market.
My point is that don't we need mega corporations that are well capitalized and that are in your market? Like, don't you need this kind of companies in
of course, we need stock market. We need them 100%. Because my only concern is, again, I keep looking at the fact that the segment that is potential off-taker for that market is still 3% that we're talking about. And that's really where my concern is. And if we're unable to grow that segment of the market of investors to actually be more than just the 3% and maybe focus on the other 97, then really what are we doing? Because really the whole point of the stock market between 1960s to the 2000s that we're talking about was the fact that everybody was in the stock market. It was everybody that was looking to invest. So yes, bring those companies to the market, agreed, but then who's going to be buying?
But I want those companies in the markets regardless. When I find out that everyone has an OP account, I keep thinking, wow, how much are they making? I want to be part of that story.
No, definitely, 100%.
So I want OP to list. I want money points to list. But I'm
not comfortable with all those kind of unicorn valuation that they get.
That's another thing.
Yeah, valuation is basically,
it's totally different from the underlying valuation that we.
But do you think this guy? Do you think so? I mean, shameless plug, but so where Nairametrics is launching this week, what we'll call NMX 100. So NMX 100 basically is companies in Nigeria that have revenues of 100 billion.
Okay. Oh, interesting.
We looked at
listed, unlisted, listed. Obviously,
listed and unlisted.
Unlisted.
Yeah, so we're able to find some unlisted companies.
How do you see?
It was a lot of research and a lot of work. So we're able to find some unlisted companies, and the whole criteria was it had to be companies that were audited because we didn't want audio.
That was always
companies
on my
that were audited by recognized audit firms.
Yeah.
And it was interesting that a lot of the companies that you might not find their numbers here, we did find their numbers in abroad because they were dual listed. They were dual registered. They were not listed, but they were dual registered. So we were able to find some.
Yeah.
And I think, without giving away too much, because the launch it's later in the week, there were about, in total, we could only find about 60-something companies. Now, there are about a dozen more that we know are probably worth over 100 billion, but they're not audited. So we didn't want to include them on the list. But there were about 60-something, 100 billion in revenue.
So there are a lot of companies.
Do you think that we have
that? And they will not even disclose it because of that.
So my concern. So my
100. But so let's even assume that horizon is 100 companies. So this is
billion.
Top line only
revenue. Okay.
Just top line. Yeah.
Top line only. Like on the exchange, we're not more than. I don't even think they were.
I think the point of for me and one of the advantages that listing brings in is governance, which is one of the things that really has failed in the fintech space and the mega company corporate space. Because if you've ever been part of any fintech conversation, and I think you guys even wrote an article about, I'm not sure whether it was you or another publication, about how governance has failed these tech startups. Hopefully, yes, that should be the natural progression. And that's one of the reasons why I would even want these people to come and list so that they are held to a higher standard. Because all this whole situation, and I say something in my alumni group all the time, I say all these guys will just come with their sweaties and hoodies and be folding their arms and saying that they raised Series A, Series B, Series C, and not being able to really account for how that money is really used and driven to drive that business. So yes, that would be one of the major reasons why I would even want to do that, because even I at some level, at some point in time, want to see those type of things grow. The InterSwitch story, which is fantastic, because it's not even your typical fintech. It's still very matured minds, and I think some level of governance has been put in place. You want to have that replicated along the entire value chain of the startup space. So yes, bring them in, and hopefully that maybe will be the thing that causes the governance. And I'm not entirely sure. I know the exchange has tried to do a board for these fintechs and startups, but it's just kind of not catching. So the question is, why isn't it?
And the problem will be valuation. Anytime you take any stock to the exchange, whether listing by introduction or whatever,
they'll scrutinize you,
and justify the valuation. So when you come to me and say, I'm not going to ever make profit, but yes, because of the number of customers I have, I'm worth this.
You get it. Because you're just growing.
So I'm working with a client now, we're trying to raise money.
But the argument is that the likes of Amazon and Google were not valued for profit. They were valued for growth. And growth is usually by customer acquisition and all that. What's wrong with that?
Because the way you said you're working with a client now, and
I mean, I'm trying to raise money like this too. And the question, something like that. I mean, it's like, I won't call it fintech because me, I don't believe there's anything.
Let's just call it startup.
Okay.
I can say fintech are the likes of Moneypoint and NoPay because they are not really into lending. They are only forced to do this microfinance bank because they are collecting money and holding it. But most of these guys, they are lending companies. They are just a finance company. They are using technology to boost it. So forget all this fintech. I'm a lending business. I'm a finance. So that's kind of thing. So this guy, that's what they do. IMTO kind of thing and everything. So when they're speaking to the guy, and the guy was like, "Why are you raising only $10 million and not, being?" The guy said, "Because I'm valuing myself on a bidder." And not the number of people that have been on my store.
Oh, it's not
subscription. And I want to be able to think about it. If you want to go now and you want a multiple of 10, it makes more sense. When you ask money now, you look at it that for you to exist, you had multiple of 50, 100. It doesn't make sense today. So that's the challenge that we have. And I'm sure that might be the part of the reasons why they are not able to list on that exchange. Maybe they can try NSD and see, but even then, the people will still ask those questions.
They will ask
but the
very
good
uncomfortable
thing
questions
about NSD is that you don't have to list before you trade. So if I go there now and I say I want to buy, and I decide that this is what the value is, and we cross the trade, it can become the value. So just what I'm saying.
That's what actually the NASD is supposed to be doing. It's supposed to be getting all these bubbling under type of companies, and it's really more like a feeder for
the requirements are quite. They're not as strict as the NGX.
Exactly, that's really what it's supposed to be doing. And again,
NASDAQ
those
kind of thing.
It is NASDAQ. It effectively was.
I mean, but I think the way it is.
So one thing that all this rights issue encourages is that equity, right? So other guys will look at all the rights issue and all the activity on the equity side and say, hold on a minute, these guys are raising 250 billion naira on the equity markets. Okay, I can actually now do some equity capital raising, right? Whether it's a list on the NGX or go on the NASD, that's not as that's not as
strict. That's my iPhone 17, by the way.
Oh, right.
Sorry, I can't afford it.
Whoops. Whoops. Is it part of the takeaway from there?
Everyone, don't tax it, please. Don't tax it.
Yeah. Okay. It's something that one need to look at, but we just need to know how to get those on. I mean, and it leads me into the issues even in the US and some of the West too. I mean, there's tendency that they too might start having some crash because it's only few stocks. You don't mention Amazon now. Maybe it's only
Magnificent Seven.
Magnificent Seven.
How can those be the one that is driving the market? It happened here too. Anytime Dangote cement fall or boy, you see that the market will just turn red that day. It's not so LG, I think. So,
and it's a good segue into the US market because I wanted us to touch on that before we move into one or two other topics before we close. And before we go into the US market, though, just one question. So we've seen all the raises, whether it's listing by introduction or public offers and all of that over the last 2 years. Which ones would you say has been the most exciting to you? Let me start with you, Femi, and I'll come back next.
Honestly speaking, I think Fidelity was the most exciting to me first.
Really?
I was shocked that they were able to beat what... they had surplus. They had to return the money and decided to take it back later on. I didn't believe it was there because they went quickly to the market. That they forced the good market. So I was like, no, this is... I was shocked. That's the truth. They are not... Tier 1 bank. You know what I'm saying? So,
but they're knocking on Tier 1 door.
Yeah, that's what I was about to say. To me, they'll be trading Tier 1.
They're not Tier 1.
What do you mean?
If they raise this capital, wouldn't they be Tier 1?
No, I doubt. I mean, it's not about tier.
It's not about capital. It's about total asset.
Exactly, total asset what to have.
Because we're struggling. We said Fugas. I really be Fugas.
Those guys, they are out of this world in terms of, I mean, when you get to somewhere that have maybe 4-5 trillion of total asset and the next one is 1 trillion, that one you can't even count them together no matter how much capital you have. So I was shocked, that's the truth. And they did very well. I thought they are going to struggle because I thought, why not wait? They were too quick to market. And that very sense to me. To the extent that they had extra, returned it and then went back to take it as my private placement. I think it was brilliant. I didn't expect that. I mean, I struggled with GGT Bank because I wonder why they didn't close it once, that they had to do 52%. But I mean, speaking to my guys there, it was intentional.
Yeah.
They never want to have anybody that are going to be bulk stuff, and they rejected some people because of personality, which boiled down to the fact that the HNIs are the guys that are able to sift this and say, who is bringing this guy? I don't want the guys on my board. I don't want these guys as my to jump in. So that's
space. Let's get into. So funny enough, mine would be LRLX, funny enough. I'll tell you why. That's coming in. The reason why I say that is because, for instance, I
like LRLX.
I was at some point over the past like 2-3 months, I made some obvious speculative moves on LRLX. People wonder why, but ultimately, as a trader, that's what you have to do.
It's paid well. It's paid very well.
So it's a selfish move.
I like LRLX.
So now that again they're raising capital and one wants to really see what's going to unfold in terms of that company. I'm just looking at it with keen interest to see what exactly is going to happen.
And it's an opportunity to sorry to cut you off, but I like one of the reasons I like LRLX, and I'm a huge buyer of LRLX, and I was disappointed. There was a point in my career I was trying to find money to buy LRLX even before all of this. I wanted to have a seat there because I like palm oil, but I think this LRLX issue is an opportunity to be part of the company from the ground up. It starts. It's almost like you can see it as a reset. In my mind, I see it as a reset.
No, that's what's happening.
Right. That's what's happening. Okay, now I can be part of this story.
That's what's happening.
Right. So I want to be part of this story.
If you're watching, Drinks and Mike, we're gonna drag you. It's Chukamodi, isn't it?
That's Chukamodi.
We're gonna drag you in Drinks and Mike's. Let's come on, LRLX story. Let's go to the US. And then we'll come back to Nigeria again. Producer has already given me like heads up. Anyways, we've got Ugodre and Femi here. Please allow us. Everybody's asking when are we going to see this? When is this? It's as if people are not even praying for crash. Let's rest. That's so you can breathe. Because every day, naysayers keep saying it's going to crash. It's going to crash. It's going to crash. Now the shutdown. Sounded like was that trigger, but it's no longer the trigger. Now AI is now back in the fore as the challenge. But I don't know. Let me start with you, Femi, and I come to Betty. What scares you? Like, why are you guys worried?
It's the force of gravitational pull. Now
you're not scientific.
One goes up, must come down.
And it's a zero-sum game, right? Anytime somebody is gaining, someone's losing in a way.
What if people that are losing just want to keep losing forever?
They'll get at some point too. I mean, my worry is just that to be sure that there's fundamental. I said earlier, a situation where it's only just about 7 stock content that is driving the entire market is scary. Because you get to say that
there's a lot of stocks that are also like doing 1,000%.
They're getting pulled in. They're getting pulled in.
So and that's it. I mean, again, I don't want to go back to that friend. Some stocks now in Nigeria too, they just rally around what is happening in the market generally. There's nothing happening in those companies. But they gained some things. They moved, sizably. Some of them grew by more than 500%.
But those Magnificent Seven, which is, I mean, like we're on Apple, Netflix, Nvidia, Microsoft,
the top about here.
Aren't they, in terms of their fundamentals, isn't it strong?
Yes, but for how strong can you be? There's a kind of, we work on P ratio, we work on EBITDA, we check all those kind of things. When the multiples start getting, to a part of it,
you find new ones now. So now I'm using PEG.
Exactly.
It's too high. But even PEG based on future. You find
I get it. I get that.
You find you justify the valuation, which your mind wants you to accept.
But the fact is that once people start thinking that, this growth might be too much, and start popping to something else, it brings everybody down. People start getting scared and everything. Now we're speaking of AI because most of these guys now, they come around with one technology or the other to say AI. I have no problem with that. But my own point is that human being, we've always beaten all these things eventually. You'll take part of it, but they will never replace us completely. I mean, and pardon me?
No, I'm just
they will help us. They will sort of us to do some things, but they will never.
So where do you think the loss is going to come from? If it does happen.
So I think my concern generally around is you're more of US macros. And just generally what's happening in that space.
In my view.
US macros?
When I say macros, I mean more from a socio-political, and I'm just wondering to myself, really, what's going to happen in that country over the next 2-3 years? And that's
I'm not even certain that the result they are bringing doing is correct because the president tell them what he want them to say.
Yeah. Well, I don't know about that.
Really?
But
Okay, when you start harassing someone to bring rates down, when they bring inflation, inflation rates up, and you start harassing them and say it's a lie.
so
So the guy can come the next day. The guy can come the next day.
It's worrisome. It's worrisome.
Okay, it's not high again.
So I think it's all the topsy-turviness of everything. Yes, AI makes it feels like it's been overbought. Everybody is going on and on about AI, and everybody is just pushing out too much money in there. Maybe feels like, and Jamie is not necessarily helping all the time because Jamie's always talking about AI.
Jimmy Diamond, that is.
Yeah, exactly.
Oh, okay.
So yes, AI is definitely a subset of the concerns I have. I think generally it's more of a US situation, and really is US really not going to feel that situation whereby they're going to have a lot more capital outflows going forward. And I think that's what is happening. Yeah, it's already started. It started, and I think it's going to continue.
Paying out more than the brink.
Yeah, and I think that's
the AI
going to
side,
continue.
robotics is kicking in though. Isn't that interesting? I'm not sure if you've been. There's robotics is live now. I've seen like $20,000, $50,000. You can have a robot made.
Is it the same one that runs into the mirror? And,
I'm sure it's
but this guy is that's probably more China where they cut the limb to show, because just to give a live demonstration that it was actually a robot. They actually cut the limb live to show that it was a robot. So
because people didn't really believe it, right? I saw a video of some robot that looked like a real lady.
I saw that too.
It's kicked in. So it's kicked in. So it's almost like the next evolution of AI has started already. Right through this rally, it's like, and you spoke of Zuckerberg throwing in more capex, and he was like, it might be a bubble. I don't know. I don't care. I just don't want to miss out.
That's the thought. That's the thought.
Right.
Yeah. That's really the thought that's driving all the AI investments at this point.
But how do you go? Like, okay, Femi, Buddy, Arnold, you guys have analyzed loads and loads and loads of companies and their numbers. How does AI guys going to mint this profit? Like, because at the end of the day, they expect us to pay, right? Because I don't know any business in this world there's no big business in this world that regular people don't pay for. Right? Yeah. So one way or the other, regular people end up paying for it. So how do they expect us to pay for AI? Now, is it that we're gonna start to have robotic, maybe like butlers in our house, robotic drivers?
When it started already.
It
started already.
So we don't have the problem they have.
So my point is that can they create consumer products out of AI? Like consume, because that's what the likes of.
They're already doing that.
I don't know about consumer, whether what you mean is something you have to put in our mouth, but consumption can be services.
Services. That's what I mean.
It's already started. It's already started. Discussion we're having that people are saying that a pay AI assistant that is even cheaper than getting a human being to do the work for you.
It's already started.
So isn't that just not then justifying the valuation that you're worried about then?
No, that's
what I'm
saying. Right? That is that yes, US is always expensive in US. That stuff that you're paying 200 grand for every month, China will give it to you at 10 grand very soon.
Oh,
and then it causes trouble.
Right.
Now they will not be able to meet their financial figures, and if
the whole thing comes tumbling down.
That's the problem.
I think that's very valid point.
Anything we do, people come into it. Look at in the next 5 years in Nigeria, almost everybody will have a refinery. I can assure you that, modular or no, whatever. And then
maybe that's 1 trillion. Maybe that will take us to 1 trillion.
But it crashed. It most likely going to crash the price of the fuel as well at the same time. So those are the kind of thing that happen. Once these guys start doing it, and with this tariff thing that the US is doing again now, there's tendency that a lot of people will stay back in their country and start pushing all those ones. Maybe you that will pay tariff yourself and buy the stuff.
But really, the question really is Nigeria, I don't want to say Nigeria ready for AI, but how will it even impact us? Because even as I see this question, I already see it impacting us at some level of scale, because we are all more efficient because of ChatGPT. That's an assistant. PPTs, I know people are doing PowerPoints with AI now. So different other things. The question really is, how is it really going to come home to roost for us? Looking at the fact that we haven't really scaled some generational levels of development that we should have.
Yeah, I don't think we have to ask ourselves that which part of our economy that AI can help.
Telco?
Right? So telco, yeah. So what about the fact that farming contributes a lot? How can we deploy AI into farming to help our guys there to push things up? I think that's all the things that we have to be. It has to be something that will support us.
That can help boost productivity.
It's scale. It's a scale issue.
So to me, it's like support. It's just like technology. When you start putting value to it and all those kind of things, that's when it becomes, something. But again, there'll be value. But again, I'm the old man. I'm the whole time.
Talking about
figures.
But I see it as infrastructure. Anything that touches infrastructure, AI would work on.
Talking about the old man, I mean, like where some of us are from, you know, when you're going to someone's house and you're offered something, you gotta take it because the producer is saying, why is Femi not drinking anything?
When I'm talking, I don't.
You have to focus.
So I have to finish.
They're telling you that he drinks at max. He's drinking water, drinking juice, or he's drinking whiskey. So put something inside.
That's true.
He drinks on mics.
Let him drink juice. Anyways, so guys, let's segue into mutual funds as we get close to the end of the show. So we're looking at some data next to my research team, and pretty interesting that we've seen, I mean, the graph here, which you can see on the screen, is crazy. Mutual funds now at over 5 trillion, I think, in terms of NAV. I hope this number is correct. Yes, and then NAV for real estate as well, topping 100 billion. So I'm just thinking now, in the fund of the future, I mean, this future world, when I say future, I'm looking at 2-3 years, please.
Okay.
In the fund of the future, what do you think fund managers are going to be putting funds together for? Is it going to be real estate? Is it going to be equities? Is it going to be digital assets like crypto? Where do you see that capital formation fund wise coming from?
So I think it's fixed income will always be a bet I will take any day or any time. Fixed income, just because it's easy. It's straightforward. There's a barrier.
Because the government is always borrowing.
Exactly, that's there. And also because you also have a barrier for qualified investors, generally speaking. So the only way to get in at a very democratized retail level is through mutual funds. Equities, I'm concerned about that. I think that hasn't gotten as much love as it should.
Future is what we're talking about.
Yeah. 2-3, I don't know. But in 2-3 years, will it still get that kind of, will it be ramping up? Not necessarily. Just because, again, you've democratized access to the trading markets, right? So I don't see any situation whereby anybody that's trying to float an equity fund at this point would likely get the kind of traction it needs. Infrastructure will definitely continue to be something that a lot of money seems to be pouring in. Everybody's starting infrastructure funds here and there, up and down. Maybe not again not at a retail level, institutional level, qualified investor level. Which other one are we looking at? Real estate. For some reason, real estate is struggling.
Yeah,
I don't get it too well.
Well, because there's no rental yield.
But the charts suggest it's grown. But over the last 5 years,
rental yield is not the game anymore. It is now the Airbnb,
land banking,
Airbnb structure. So if maybe the conversation around real estate needs to change in terms of the revenue model needs to change towards this angle, and you get it and you democratize it through a fund, I think it might likely take off. So those are things maybe you should want to look at. Yeah.
So for me, I think it's I think private credit shoots up massively. I think that
there can be a fund for private credit.
100%. And SEC has literally just is now allowing private credit funds. And I think that a lot of asset managers should take advantage. Definitely, right? And I think the market, investors have to take advantage of the fact that banks have been sitting on potentially lending to the economy and not doing anything.
They haven't done anything to be honest.
And it's a massive opportunity, right? So you're seeing T-bills collapse, T-bill treasury bill yields collapse, you're seeing bond yields collapse. We have no access to OMO. Inflation, and the environment is a lot easier for businesses to function. Businesses should now start taking investors should now start taking advantage of the fact that there is an opportunity to lend to businesses. And businesses should also take advantage of the fact that NPL is lower, inflation is lower. So it's not going to be as expensive for them to actually borrow from non-banking institutions. So I think private credit is going to be huge. For investors, I think investors will take advantage of the private credit markets. So I think that's going to be huge. I think digital assets like crypto funds, we'll start seeing that in the next 3 to 5 years. The SEC has now authorized 2 exchanges, which actually, if you really think about it, allows for the creation of a crypto mutual fund.
So I agree with the fact that because there is an opportunity there, right? Especially in digital assets, because there is the one side of the market that won't touch it because it's just outside of their infrastructure side, infrastructure domain. There's another side of the market that is playing heavily in between. Right. So if you can straddle that middle ground and do something like an ETF,
100%,
then it takes off.
And
it has traditional traction.
Femi, views?
Yeah, I mean, so what I think is going to determine where we're going to be in the next 2 years, like I said, is liquidity. How liquid we can make those assets to be. So I agree with the fixed income. See, one of the reasons why we've seen massive growth in collective investment scheme, especially
money
market fund,
crazy.
Because of that liquidity and the rate it has given. That is already giving banks a lot of run. I believe that a lot of the money that are going to the money market fund are the usual money that will have been staying devoid of banks, commercial, current account, and all sorts. In fact, a lot of companies, asset managers that are bank related, they are benefiting from it.
Yeah, definitely.
Most of the funds
money
that the
market
bank will
funds
have
are huge.
rejected.
Stanbic, First Bank.
So that will happen because people, Nigeria are still not ready for risk taking that much, and that's why we've struggled with equity. This year,
and it should be the inverse though.
The equity has done quite well this year.
Very well.
When people start saying 30%, 40%, they run to it. But when they find out that the 30%, 40% is year to date,
they've missed the upside.
And they've missed the upside because it didn't start early.
It's not forward looking.
Jump out again. Rather when the money market that continue to
just give you that
so
return.
that's the challenge. Now, why we didn't have that problem with the real estate, even the real estate growth, I would suspect that it's probably the federal government real estate that jumped that stuff. That one that Murphy just did, right? Because we struggle with rate all this while. Sky Shelter rate, UPDC rate. Was a struggle. Even Union Homes did some rate that time.
Always a struggle.
It was a struggle until we started having Chapel Hill with the First Infrastructure Fund. And because they have that first mover advantage, they've done quite well in that. But if you look at it, to most of their investment have been in real estate too. So that, despite the fact that I call it infrastructure fund, how much is the money, sir? You can't even build road with those money now. So clearly the infrastructure is outside. So that, then Murphy took it to another level because most of the money that probably have gone to family homes, I guess, decided to, expand it further so that they can now be playing at both sides. So maybe, but because again, we have this problem with land that is not flippable easily. It stopped that liquidity and it make it, but I can agree with you that maybe in the next 5 years, we're going to see more in that regard. But in the short term, people still do more fixed income.
More, definitely.
All right, guys, let's get into last topic, for the day, which is consumer goods. We kind of touched on it a few times on Drinks and Mics, but you guys are here, so I kind of think there's a remarkable story with consumer goods. We've seen these guys battered over the last 2 years with exchange rate depreciation and all of that. But there is some incredible turnaround stories that is out there. You've seen Nestle essentially claw itself out of negative return earnings. Nigerian breweries, same thing. Guinness, which everyone thought was dead and buried. Acquisition came in, and then in less than 2 years, you're seeing turnaround. You're even seeing UAC.
Yeah.
In
fact,
as much as a conglomerate, incredible turnaround going on in those spaces.
Incredible.
I just want to catch your views on these companies. Nestle, Cadbury, whichever one. Pick.
I think mine would be UAC. That company, which is ultimately a conglomerate, which has several investments, and the reason why I like that story so much is because the change of management has been driven by very young individuals. If you check the profile of management team, very young people, young chap, even Mr. Aishimoju, I've forgotten his name. That's the MD. And then you even have somebody in the name of Funke, who happens to be the CFO.
We have to bring Funke on Drinks and Mics, by the way.
Stanbic. And again, it just goes to show you that with a quick vantage point and just change of view, you can do a very sharp turnaround on something that was fledgling like Mr. Biggs. And just look 5 years back in terms of what they did around that business. They gutted it at some level and just really re-engineered that business. It would be good to see, again, have her sit down and give her a story around what exactly had happened.
But what's your view on this Chi acquisition? Do you think it's a good deal for them, though?
I think it could be a very good story for the future. I think it is. It likely complements the product set that they currently have. If you look at it from the standpoint of the fact that they have outlets, eateries and whatnot, and they're just lapping all that in together, it might just be an ecosystem play right there. I think it will likely make sense. Maybe not crystallize over the next 2 years or so, in my view, but yeah, it makes a whole lot of sense for me.
So why do you think these guys are doing well and the guys the likes of ShopRites?
Pardon?
ShopRite.
They're selling different things.
No, because it's something I'm thinking about, right?
ShopRite is not.
They're selling different things.
We're talking Nestle card.
Yeah, talking about.
I want to talk ShopRite. I want to put ShopRite into the mix.
Looking at consumer from retail angle.
Retail outside.
So bring that into the mix.
So the good thing about
They just got sealed today.
Exactly. Sorry. Yeah. So
I mean, the thing about manufacturing in Nigeria is that the demographics suits them quite well. What I think has happened to a lot of them is poor funding and
Poor funding?
Yes, because they always take their money. They take their money from foreign
is it
sources.
ShopRite?
They mostly take their money from parent company. Nestle.
And they've been just sitting pretty with that.
Yeah.
When Mr. Shegun, I forgot his name now, when he was chairman of Nestle, he said that they had to force them to do some backward integration for their Maggi business. Something. They had to start growing some of those local beans or whatever they do locally, yeah. Which made them close one of their foreign supplier.
Yeah.
Close the business because they get all this input from foreign. One of the things that caused their problem last year for foreign exchange was because of remittances.
Yeah, 100%. That was always the issue with those guys. Yeah.
Local.
Yeah.
I mean, there's no way you go to Nestle and tell them to go and borrow money locally. They will not listen to you. They won't answer.
It's very company driven.
Same thing with Anything's tried. At least they try to do commercial paper.
Nigerian breweries.
They've done some commercial paper and probably some.
They just raised 500 million
as
now
well.
to cover some of those negative positions. So what has happened is that there's the market here, but a lot of them they try to use that to support their business elsewhere, and that cause trouble for them.
Because if
once they start reversing that, start looking local, try to use money here and make sure that they edge those currency.
That works.
UAC is a very interesting story. UAC has been an investment company. That's what I think. I might be wrong. And so when Funke comes, or they might be able to clarify.
An investment story.
When they are there, what they always do is acquisition. Set divestment, acquisition. They don't seem to sit there and really focus more on building the business. And I think that's what these guys did when they come to that place. Look at business that they believe that the unwieldy structure might be affecting us. Take them out. And flip something around. And then they start looking into the business itself. And start thinking about Mr. Biggs, the gala business, all the food business.
That gala business.
So they started looking at it more critically rather than, when we see opportunity, we'll flip it and buy another one again. Buy the livestock today, sell DMA tomorrow. I'm just saying. So that's what I think changed, because demographic favor commercial consumer stuff here. Exchange rates even make a lot of people to change their taste. You don't have to eat imported food anymore. You don't look local and hit so many things.
That's why ShopRite was struggling.
Yeah, so that's my next question, right? So I mean, even through the so you look at the income statement. So the issue was in the middle of the income statement, right, of these guys, because top line was fine, price times volume, it was still going up through everything, but it was in
the expense line was
expense line,
mostly exchange rate losses and all that.
Exactly, finance costs, interest expense, the USD stuff they had to pay, right? So they fixed up the middle of the income statement to be okay, but then ShopRites, right? Price times volume, they should have still. If you're saying on the top, they were okay.
So it was declining.
Still been okay,
but it was declining.
Price times volume side.
But I think it was.
One problem with ShopRite is, again, you need to know the market you are competing against. I remember when I was speaking to Obmat, so me and one of my friends, we got some place in Oshodi that have some space. Trying to create a mall there, and I said we want Hubmart to come there and be, anchor tenant. And we sat down with them, and the Hubmart was like, you know what? Our competitor, they are those malam, they have kiosks. Yes. Now,
For real?
all those people, that's what they said. That all those people that will go to those guys, they're the ones that come to this place. So if we can't get a place that those people will not come into, then there's no point doing it. Because what are you selling really? That's the truth. Because what are you selling that those guys cannot go to that place?
So is that what the likes of Boko have done really though? Like done better?
Yeah, I think so.
Yeah, that's what it is. I mean, get yourself location.
It's about footfall. Because the footfall, if you looked at the past 3 years or 4 years at ShopRite, just before they went out, the footfall became significantly less. And when that devaluation thing happened, it dropped off drastically.
So which is the point? Sorry for interjecting. So the point is, it's not that ShopRite is not competitive.
No.
I mean, with the likes of maybe Ebano and Boko and all these other guys. It's just that their model is to be in malls.
Yeah.
Right? And
high
footfall
expenses.
costs
So that-
dropped. Yes,
and
because
that
people
expense
weren't
line
going to
costs-
malls anymore.
Yeah,
And I know.
people are-
So
yeah.
if you ain't going to
So
go
their
to
running
a mall,
expense stayed
or
the
if
same.
you think it's like, why do I need to go to a mall
It
to
didn't
buy
even stay the same, it
groceries
went higher.
when I have these other guys beside me?
Their running expenses went higher because if you look at it,
But you're saying they also stopped getting traffic.
yeah, footfall
Yeah,
also
I'm saying
came.
that
So it was a
footfall,
double. It was a
footfall,
double
yeah.
whammy.
Yeah.
You know
The
that
revenue fell.
across Lagos, different shops start. If you go to the likes of Beggar side, Adide is very popular in that area. Adide supermarket, you have them small shop like that, grocery store that sort out everything you want to do. If you go to the Alimosho side, you have Grocery Bazaar. That's sorting out that
So
area.
then why did
If
they
you come to
reduce
this
traffic?
side,
Is it
you
that
see Prince Ebano, that's sorting out that. So you find out that, I mean, okay, so if I want to drive from my house now, especially to go to the Palm, with all those toll gates were all around.
To dress up, man.
And I can get to Prince
so is that
Ebano.
what it is? So is it that so is it that in the mind of the consumer, ShopRite was too expensive, so I'm not gonna go?
You're not getting it there.
I don't understand why.
I think malls
The point
generally.
about it is that it's
in
too far off now. I mean, I can get alternative
But
closer
Femi,
to my house.
is it
It's a
about
lifestyle thing.
distance or the fact that the entire business model of a mall, right, that people don't seem to remember, especially in Nigeria, is that malls anywhere in the world is usually driven by consumer credit. So people who go to malls to shop mostly go to malls to shop with a credit card.
Correct.
So you don't need to have the cash with you to pay, right? So, but in Nigeria, you expect somebody to come to a mall, a regular guy, because malls abroad are visited by regular people.
Yeah, of course.
You know, like handyman, driver, right? Regular guys go to malls, right? So a regular guy in Nigeria is not going to go to a mall
No,
to
definitely
go
not.
and buy a shirt.
No, definitely
of
not. That's not what is
50,000
happening now.
cash,
Yeah.
right?
That's
Not,
why. That's why
Okay,
the
I see
footfall.
that. I
Is it
think I
that-
see that. I think I see that.
yeah.
The
Then
that's why
you
the
know,
footfall
most
came.
of the other places, the malls or their corner shops, they are located jointly at a particular place that you have to go to. Unlike here, that every corner you turn to, there's one person that is selling one grocery or the other.
Ah, okay. So you don't have
Yeah.
to go too far.
So you
to
don't have to
actually
go
find
far.
the
Yeah,
restaurant.
it's
Okay.
true.
It's not the same
Yeah.
thing.
So-
I want to buy bread. Why would I travel to,
For me,
and it's the same bread that you
It's
have.
the same
Yeah,
bread now.
I think generally, clearly, lifestyle change clearly happened across the board for everybody, whether we like it or
No,
not.
but we're also saying the lifestyle change didn't happen per se because we're saying on the top line of this guy's price times volume, they're still making money. So I'm still drinking.
So, but that's the
beer.
point. That's the point.
Right.
So the distribution channel for these guys didn't shake. So in fact,
Okay.
you now have a lot of these people closer to the customers
closer
that they
to the
need.
customer, yeah.
And so what
Okay,
they now
okay,
did was that
okay.
they went basically pet. So pet bottles,
exactly,
pet drinks,
exactly,
sanitization,
exactly.
and all of that.
Which is
I
still
know
comes
the
with
struggle
lifestyle
for
change.
that.
Yeah.
Okay.
It's
okay.
still a
That's
lifestyle
where the
change.
struggle happened. Yeah,
For
yeah,
me,
yeah.
because again,
Yeah.
on a day-to-day basis, if my wife comes and says, I need to go to the mall, I need to spend, last thing she's probably going to spend maybe 300, 400K or some 500K or something. But if you're like, oh, babe, things are hard, let's cut down a little bit. Next thing you know what, okay, I'll go to this place, I'll just quickly go and buy it.
Aha.
Yeah.
Alternative.
That's the lifestyle change that's affected, and the spending
And
habits
then of course
has
you still have
changed.
the likes of carry there, Mori Market, and all the
You
miles.
get,
Yeah.
and I'm looking
Mount
bulk,
Top,
I'm
and all
thinking
these other
bulk and
places.
Yeah.
I bet you don't know
discounts.
this market.
Femi, do you know this market?
Yeah.
I bet Tunji doesn't know this market.
Yeah.
How can you not? I mean, I
He
walk
used to
in
know before, but
Marina
he doesn't know
and I
anymore.
walk inside Marina.
Tunji is a big boy, he doesn't know this market.
I hear you. If you live in Lagos, no, you must know them.
All right, guys. We now move into the last section of the show, which is buy, sell, or hold. So, I mean, buy basically means yes, you agree. Sell means you don't. Hold means you're neutral. Thank God Tunji's not here. So Tunji came over with us to buy his shell, his sellish, whatever. I'm happy. Arnold at some point started, gravitating towards Tunji's buy shell. But then buy, sell, or hold is basically that. So, I guess the first buy, sell, or hold is the CGT. So we've seen
You don't need to talk to
clarification.
myself.
Sell.
Don't worry.
Wait,
Don't talk to myself. Don't worry. No, it's clear where we are.
Wait down. So, God. So we've seen a clarification. Some people call it a walk back. But do you guys see them buy, sell, or hold the president through the is it NRS? Is that what they call it? Nigerian Revenue
Services.
Saying that they're going to suspend the capital gains tax for a year, at least, buy, sell, or hold. Before the year ends. Buy, sell, or hold. This is happening.
No, policymakers are too stubborn. Stubborn. Policymakers are stubborn.
So they're stubborn, but
buy, sell, or hold.
So I think it's a strategic call. So I think on that one, I do think it's going to happen. So it's likely going to be a buy. The reason why I think it's going to happen, or how I think it's going to plan out, it's likely going to be we'll think about it. Let's take it back. Let's review and do stakeholder consultation. From there, it's paused indefinitely. And maybe it comes back maybe in another form in like next 2 years. Again, if the stakeholder community does what it needs to do, if NGX does what it needs to do, or the entire capital market does what it needs to do, they need to be selling the story of not just yet, hold on, right? And in terms of this, let's make sure that we grow the pie. If I were there, that would be what I'd be selling in terms of narrative to the presidency and NRS and FIRS. So yeah, I think I would definitely be selling CGT. My expectation is they definitely will walk it back.
So you think they'll walk it back?
Yeah, they'll walk it back.
Man, so I think policymakers are too stubborn, especially Nigerian policymakers.
But this government,
and I think that,
they walk back a lot of stuff though.
And I think that the people that buy in the stock markets aren't as aggressive and protesting enough to actually catch the attention. Really? Yeah, it's not something over.
Have you carried a placard since though?
Exactly. That's what I'm saying. That's something that you're not going to see investors. Oh no.
They're not going to do that.
That's what I'm saying.
And you guys have a union though. I mean, there's union. We don't like unions.
Right. So because of this, I don't see a walk. Yeah, I don't see a walk back. So I'm selling, but I'm a sellish hold because
oh my god.
Okay, if there is a suspension, it has to be for multiple years. It can't just be 1 year. It has to be a 10, 20 year suspension.
What?
Yeah, 100%. Because you need the market, you need the participant. Man,
I'm calling you Oliver Arnold from now. Oliver Arnold.
No. But I don't see a walk back. Policymakers are too stubborn. Too stubborn.
Selling.
Yeah.
Yeah, I mean, I think I'm going to sell. And the reason is that this government is pro-people. I don't think they will... I mean, walking it back in this case will look like a sign of weakness.
Yeah.
Because I see that the people that will vote will hail it. Because it's taking money from the rich people, And they said that the CGT will be progressive, blah, 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 blah. So I think that maybe what will happen is that within the next 6 weeks before the implementation kicks in, they'll try to do some consolidation work and everything and still go out with it. Make more clarification like they've done yesterday, explaining more that, and maybe give more clarity on exceptions so that we'll see things there. But I think it will go ahead. I mean, that's
I'll hold because I kind of feel like I'll hold because I think that if I've also studied how the government works, they tend to gauge, sentiments a lot.
Yeah.
Right.
Yeah.
See where the pendulum swings and all that.
Yeah.
They're very, very pracmatic. That's one thing I would
like. But do you have an example that you have in your mind right now?
Several. They walked back that tax, NSA tax again, the security, that tax, the telecom tax. The number of taxes. This tax that the security SSS we're going to collect. One of the taxes. They walk back a number of times.
Even your tint permit thing.
Yeah, they walk back. So because they are popular,
it was the last minute.
Yeah, once you see a lot of
pro-people.
Yeah, the pro are also pro
business
investment, foreign. So if there's a lot of pressure, diplomatic pressure, I kind of think they might cave in. So that's why I kind of hold. So because I mean, a lot of those things haven't happened yet.
Yeah,
and that's why I'm holding. All right, so let's move on to the US now. Do you guys see this month? Because I mean, we've talked about this a few times on Bicycle, but since you guys are here, you guys are equity guys. Bubble busting in November, or no? Let me flip it. We're gonna see higher highs in November, buy, sell, or hold instead of a bubble. Higher highs, buy, sell, hold.
I think for me, higher highs. The reason why I say that is anything that hasn't stopped or made this bubble burst up till now with all the events that have happened and transpired, even with the government shutdown, and it still hasn't bought. Forget it.
Yeah,
it's gonna go.
Money is too much everywhere globally.
Same thing.
You're buying.
There's a December Fed cuts coming.
Yeah, exactly. That's what
buy everything this month. Buy.
United was buying, man. Because I'm buying.
Exactly.
All right. So last buy, sell, hold. CPI data is out next week. We did touch on it last week as well. Yeah, and I think if I recall, Tunji and Sam were all buys. I'm not trying to bias you, but they
So what's buy?
Yeah,
Go down.
yeah. So
Right.
So they were saying
I just want to know
not that simple.
buy
Though.
is.
Not that simple.
Let's hear it.
Not as if go down or
Not
sell
that
is
simple.
not good.
Buy, sell, hold. Inflation numbers hit 17%.
Yeah. Okay, sorry.
Buy.
I'm asking him.
Buy.
Buy. Strong buy.
Yeah, it's an easy one.
It's at 18 now.
Yeah,
it's
I
an
know.
easy one.
Strong
At
buy.
least it should drop at least
Strong
1%.
buy.
It's an easy one.
By this November.
Yes.
See,
Yes.
I mean, there are a lot of reasons why it should be. In the first, that's the base effect. Last year,
Exactly.
October was
Hey,
33.08%.
God.
Guy, that was high. Two, this is harvesting
Harvesting
season.
season.
Yep, and it hits
Food
the
is
market.
gonna go
It
down.
hits the market now.
Again,
So,
throughout
yeah,
October,
strong buy.
exchange rate was so imported inflation should go down.
Yeah.
Straight down.
So guys,
Yeah.
but let me.
I'm surprised if it's high 16s.
But I mean, I know that's
Fine, let me just say high 16s.
high 16.
High 16s. Let me say it. Full
We're
chest.
going to 15 by the end of the year.
High 16s. High 16s.
People statistics projected 15
High 16s.
Oh my God! So the president's prediction is happening.
Yeah. We knew it was going to happen.
Wahala.
But before I let you guys go though, what does a 17% or high 16s as Arnold put it, inflation, what does it mean for next year?
Single digits now.
What does it mean for next year? Is that it?
Yeah, I mean,
Single digits. Well,
No,
if
I
we
mean,
Why
it's
do you do that?
still-
No, statistics will chop. What does it mean for Nigeria?
Okay, sorry.
That's the problem.
I mean, so what that tells us is that we can drive rates down further. Yield may go down for that. That scares me because we
Too
have
quick,
one
right?
issue with how CBN uses its OMO. Apart from managing liquidity, they also use
FX.
it to stabilize FX.
Yeah.
So if there, for any reason there's any kind of
aggressive drop in yields.
do I want to pull up OMO, right? To attract those guys back. DMO will always want to put NTP down so that they can reduce cost. There's no
so that they can reduce
but
their
now
costs.
disparity continue to end.
Clearly.
And then investor can start looking, are you guys managing this thing or what? Because it happens. There was a time during COVID that NTB was 0.15%. And OMO was 14%.
That was Murphy magic.
It makes sense.
Magic.
It makes sense to all the investors that this is manipulation. We can't take it.
Yeah, but I don't think they'll do that. I don't think
I don't expect it to happen. I'm just saying that's kind of thing that should happen now because once inflation is low, yield generally should go down.
Yeah.
The government does not have to be, taking high costs.
And then my worry on the effects is we're actually seeing dollar strengthen.
Yeah.
If we really look at it from so that weak dollar that we've been enjoying, thinking it was the Naira and looking better. If OMO now isn't attractive for that FX management.
I know I was going to bring this on. I knew.
No, but it's true now.
It's true. I'm going to ask you guys now.
So-
when you finish.
So mine is, I think, obviously, I'll always be looking at the equities market and the impact.
It's good for equities.
Good for equities. But the question is, with the mix of this lack of clarity on CGTs, where
It's bad timing, right?
just bad time.
terrible
It would have
timing.
been great
Yeah,
if
time to
this-
take advantage of everything. Yeah.
That's gone long.
Zach, you're hearing them.
I'd
Bad
have gone
timing.
long.
Yeah.
Zach,
Yeah.
bad timing. That's what the market.
Yeah.
That's what they're saying. No media.
This is when I have to be buying. Because borrowing costs are low.
You get it.
Right? Borrowing
So
costs is like
it's
18%. Borrow
everything-
18%.
all
Buy
this IPO,
stocks, get
1 trillion
40%,
they're talking
walk
about.
away.
Very easy. Very, very easy.
Yeah.
But
So you guys
CGT,
want to make all
that's
those
the
do and not drop something for government?
drop something for the boys.
Well, let me ask you guys, and I'm excluding Arnold from this last question. I want to exclude him because I always know his answers. Where do you guys see the Naira next year?
And let's be honest with
Where do you
ourselves.
see Naira next year? I know it's too early to judge, but like ballpark, where do you see Naira next year?
My expectation would be for Naira to be like a 1,200 and stabilize around that part.
Expectation. I like how you said it.
I mean, that's what it is. I can't know more than that. I mean, Citibank has said it's going to go back to 1,700 if we, continue to reduce the NPR. But I think we should be stabilizing around 1.2. Wow. I mean, that's what I would like to do.
I think more like 1.3. I think more like 1.3.
By the end of 2026? Wow. You guys are bullish, man.
I think more like 1.3.
That's
we don't need your opinion.
Because what goes up must come down, right? Like you said. So, I mean, what goes
anyway, guys, these are the drinks and vibes brought to you by Nairametrics. It's amazing. This is one of my best Drinks and Mike's episodes, by the way. Yeah, love it. It was fun having Adeyemi and Femi around. You guys have really made this show interesting. And I'm sure that you guys are watching wherever you are in Nigeria, across the world. You found this. I hope you guys found this very interesting. Of course, drop comments in the comment section. Have questions. We're going to put up their handles as well. So if you want to follow them. And also, you'll also find out where, the businesses that they own, in case maybe you want to do stuff with them.
Straight up.
Please feel free to contact them. Of course, you all know the man here, Arnold. Arnold, by the way, has made a big move. He's not ready to announce it yet, but I know he's going to announce it one of these Drinks and Mike's sessions very soon. Yeah, he's made a very, very big move recently. So you guys will hear from him next week. Hopefully, Tunji will be back by then. But if he's not back, the show must go on.
Yeah.
Of course, follow, subscribe, like, share. This has been Drinks and Mike's brought to you by Nairametrics. Until we do this again next week. Oh, by the way, guys, cheers for the February guys.
So we can actually drink.
February by proxy.
Of course, February. Yeah.
We'll give you. Until we do this again next week, do have a profitable week. Bye.